Hello all, good evening. This is Niftydirection recording video on 27th of December 2020. So this video is regarding Fibonacci Retracement and Extensions. So in this video we are going to learn how to use the Fibonacci Retracement and Fibonacci Extensions. Here I just want to give a small disclaimer that this video is just for educational purpose. So any charts or any levels that we discussed in this video are just for educational purpose. If you are taking any positions based on it, any profits or loss encountered will be your responsibility. So let's move ahead and discuss about the Fibonacci. So today we are going to look at these points like Fibonacci number, retracement, how to plot them, some examples of both of them. So let's first understand what is Fibonacci. So Fibonacci sequence actually is something that you must have learned in your school days, okay, where the series starts from 0 and 1 and the numbers are created based on by adding the previous two numbers. So 0 and 1 are the first. So 0 plus 1 it becomes 1, 1 plus 1 becomes 2, 2 plus 1 becomes 3, and so on. So this is the basics of a Fibonacci sequence. There are a lot of formulas and a lot of stuff that are being created from this Fibonacci sequence. It is also believed that, and it is also there are some proofs as well that this Fibonacci sequence and the many forms that are created from the Fibonacci sequence are present across the universe, present in a human body. It's present in nature. It is also used to design arts and architecture, and it is present in human bodies too. So with this principle, many traders also believe that this is also present in financial markets, and there are a lot of tools designed based on this. So some of tools are Fibonacci retracement, Fibonacci extensions, these couple others like Fib speed, resistance fan, then time zone, Fib circles, Fib spirals, etc. So this is one of the example. At the center you could see a Fibonacci spiral which starts from 0, then 1, 1, 1, 2, 3, 5, 8, 13, 21, 34, like that. The spiral is created. This structure is found in many places, as you can see on the screen. Similarly, it is one of the thing that is derived from Fibonacci is golden ratio. We'll talk about that more later on. It is also said to be present in a human body. So these all things point to the fact that Fibonacci are very useful in the financial markets as well. And let's check how we can use them. So the next part in this video is regarding the Fibonacci retracements. So Fibonacci retracements are nothing but the percentage levels of swing high and swing low. So on chart you have to plot swing high and swing low, and then you will be able to see the prices bouncing from one of these levels. So 23.6. So you need to remember these numbers: 23.6, 38.2, 61.8, 78%. All these are Fibonacci number except 50%. Okay, they don't have formula, but they are derived from Fibonacci. And so these are plotted. They are plotted on the charts based on swing high and swing low. So let's check one of the chart and try to plot Fibonacci on it. Okay, maybe I'll take from here, not from our watch list. I'll take Vedanta Limited. So this is the chart, and this is TradingView charting tool, where you can see Fibonacci retracement tool available here. Okay, so there are a couple of ways to plot the Fibonacci. So here when you want to, let's consider you are at this position, okay, and you see that the trend is getting exhausted. Couple of shooting stars are getting formed. So when you are at that place, you will find that this was the swing low. There is no wick, not a wick. There is no trend break here. it's continuous uptrend. So from here you consider this as a swing low, you plot Fibonacci on this. Okay, so now you can see here some numbers plotted on the left. These are all Fibonacci numbers, and you could say uh, these are decimal representation of the Fibonacci number. So 23.6% is this one, 0.236 and 0.328, etc. Okay, so these number carries special importance. So whenever you see that a trend is getting exhausted, you could plot a Fibonacci on it and see whether it is breaking this particular first Fibonacci number, 0.236. But there is no guarantee that after breaking this it will go more down. Okay, if the trend is strong, it can reverse from this point as well, 0.236 as well. So as you can see, this is a static indicator, you could say. Here the whatever values that are plotted will remain same, and it's not like moving averages or RSI that it changes with the price. It doesn't change with the price. But yeah, so once you plot it, and if it's plotted correctly, it will show you possible reversal points. So this is mostly used to check the pullbacks from the current trend. So current trend here is an uptrend. Okay, so it's an uptrend here going in this direction, and want to see we want to enter this uptrend, but we have to wait for a pullback so that we get uh, like maximum profit. So once there is a pullback, you can enter. So that's the idea behind the Fibonacci retracement. So here you could see that it first broke this particular 0.236 levels, and then went further to the next Fibonacci level. So that's the idea, basic idea behind using the Fibonacci. So once it breaks one particular level, it is supposed to go to the next level. So this is the bare minimum retracement that can happen, 0.382 and 0.236. So this is said to be a strong trend. Okay, when the prices retrace only to these levels. If it retraces to 0.5 or 50% of the trend, then the trend is said to be correcting deeper. Okay, and it's a deep correction, it is called. Okay, then let's see the more numbers. So 0.618 or 61% and 78% are the next numbers. So this actually is the major number. uh, if it is in a deep correction, then it is said that this from this possible level it should start the reversal. This number doesn't carry much significance. Its price rarely bounces from this level. It usually breaks the low, and the downtrend starts. So once you see that 0.618 level is broken, then you could assume that the reversal has started, like the trend is changing completely. So it will start the downtrend in that case. So this is the way how you should plot it, and how you should read the Fibonacci levels. So majorly you should look for a break of 0.236. Then you can say that the trend is going to the next level, that is at least 0.382. And if the trend is not strong, it will fall further to zero point 0.5 and zero point 0.6. So that's how you should be reading the Fibonacci, and this is how you should use the Fibonacci retracement. So yeah, this is just used for the checking the pullback and entering the same trend, same dominant trend. Okay, so that's all regarding the Fibonacci retracement, how you plot it, and this is one of the example. Maybe we can check more examples. Let's see if we have something else. Let's see the L&T financial housing. So here again you should find the dominant trend, and here the dominant trend is uptrend, right? When you check on the daily chart, the dominant trend is uptrend. So another tip I want to give here is regarding the plotting the levels, or plotting retracement. So finding out this one would be the possible swing low, not this one. Okay, so that's something that you would get to learn, because this is majorly used in Elliott wave and harmonics Fibonacci levels. So in Elliott wave, you should find out the swing low from where it is not swing low, but this is the start of the trend. Actually, this is the start of the trend. But yeah, from this point onwards, took the jump. It is going in an impulsive way. So this point should be considered as the point to plot the Fibonacci retracement. So when I plot from here, let me pick the tool. So when I plot from here, I would see that the trend has retraced 0.382% and now it's reversing. So it means that the trend is strong and it is still going to go up, breaking this particular high. So yeah, 0.382, it has reversed. One more thing, whenever you see a 0.382 is getting respected and it is not falling further down from that, you need to also observe the price action and see whether there are definitive indications that the trend is going to reverse. So even if you don't know that, like even if you are not good with the price action, then what you can consider is after breaking 0.382, whether it touches and breaks above 0.236 level, then you can say that the trend is going to change and it is not going to fall further. That's what the assumption is. But wait, that's not the always case. There will be cases when it starts going down from that level as well after breaking this. So there is no guarantee actually nothing guaranteed in the stock market, but you would take the trades based on the best possible uh, best probable situations. Okay, so the best probability will be the the trend is going to reverse as it didn't break point 0.3 and it started going up again. So that's how you should be doing the analysis based on the Fibonacci retracement. So let's move to the next part, uh, that is Fibonacci extensions. So Fibonacci extensions are used for the finding the targets. So Fibonacci extension levels are 61.8%, then 100%, 161%, 200%, 261%. So these are some of the Fibonacci extension levels. There are further more, but they are rarely used. And how you are like what you want to do with the Fibonacci extension is to find the potential target. So here let's say uh, you are currently at this position. Okay, so you just see that it has broken this particular high. Okay, so you see that this is the bullish candle. It broken above this and closed above this level. Okay, so this is, I think you can check here, high point. So this here is 73.55. This was a bullish Marbozu which broke this candle. If you check on the volume, it will also give you the slight idea that the trend is changing and it is broken out of the resistance point. So here at this point you are not aware till what point it is going to go. So for that you can use the Fibonacci extension and plot the Fibonacci extensions to find out the potential targets. So from this particular figure, you would know that this was the swing high. Okay, potential swing high. This is the high point. Okay, and this is the low point. Okay, and this is the start point. Okay, so this will give you the idea. This is actually low, this is high, and this is pullback. Okay, so you can plot Fibonacci extension on it. Just select this one, go here, plot from this to this. Okay, that gives you swing high and low points, and this gives you pullback to the trend. So this is said to be an uptrend here, right? So this is an uptrend. Okay, so this is the minimum target that you can expect, that is 0.618. It is going to go 0.618 levels. There are 1.618 level. 0.618 is the bare minimum level that it is expected. So this actually is used in Elliott wave for finding the last fifth wave target. So we'll create new videos in which we'll cover Elliott waves as well, but this is how you should plot the Fibonacci extension. And when you see this particular point is broken, you can expect the price to reach at least till this point. Okay, actually you would see that it has reached this point. Okay, there is one, you would say that this possible low is also a swing low, right? Yeah, actually this is right. So here you will get the bare minimum target when you plot from internal swing low, but when you plot from this low, you will get the further targets. So let me just select and drag it to the last. Okay, so based on this swing low, the target comes to somewhere around this level. Okay, so 1.6, when you are plotting the targets and when you see that from the particular low it is going up by breaking a particular resistance, uh, you can expect first target to be a 0.618. Then there are further targets as well. Okay, so let me go and do the changes in the setting. You could see 1 and 2 as well, right? So these are the levels that we discussed. 0.618 is the extension level, then 100%. These are actually a decimal denotation of the Fibonacci level. So 61%, 100%, 161%, 261%. These are the numbers that we discussed on the other on the Fibonacci extensions, right? So these are the numbers. So these are the bare minimum expected targets from the levels. Okay, so here on the charts, so first would be this target. Okay, so majority of time you can expect, if it is just the start of, if it is just a start of uptrend from the recent lows, so you would see that there is a no recent low over here. Okay, so since I know Elliott waves, I can say that this is this particular swing low and this is the swing high and this is the pullback to this uptrend. So then I plot Fibonacci on this, and this is the set, this is said to be breaking resistance. So this particular point has been broken. Then we can consider, when you plot it, you will actually see that it is already achieving 0.618 level. So the next level would be 1 and then 0.618. So these are the levels that will come next, and this is the rare case scenario where it will go to 2.618. When the trend is too strong, it will go to this level. Okay, so that's what you should remember, and you will not see some minor pullbacks when it is trying to go to that level. So when you plot the Fibonacci retracement here, you would see that, let's plot it here. So you would see that it retraced 0.382. Okay, so if at all it is going to go to this level, you would see that multiple upper circuits will take to this level. It's not possible that it is going to retrace this much and then go to the level that is 2.618. So it's already retraced, so in another move it will touch this level and it will start correcting, and then again it will go up. So this is how the Fibonacci extensions are used. So these are the couple of examples just taken in order to show you how the Fibonacci extension and Fibonacci retracements are worked. There are more details on this, uh, like with practice only you will be able to know how to use them in the live market. This is just the theory. Actual market usage may differ, and yeah, there is no guarantee that these particular levels will be reached. Okay, that's one thing that you need to be aware. You need to use other technical indicators like RSI, and there are other Bollinger Bands or MACD. These particular indicators you can use in combination with Fibonacci to know the strength in the trend. Okay, and to know whether it is going to start the pullback. As you can see here in this chart, it formed the three red candles, which are known as three black crows, and then you could expect that it is going to hit at least this level. So this is how the price action can be used as a confirming tool when you are using Fibonacci retracement and extensions. Okay, so this alone will not help you in the trading. You need to know other concepts as well, like price action and other indicators, or this methods are usually used in a Elliott wave, which is Elliott wave and harmonic patterns. This is widely used Fibonacci tools in those particular areas. When you know how to use like when you know how to work with the Elliott